Welcome back to AD the Baker Show. We have a lot to discuss today because Google reported their earnings, Chipotle reported their earnings, we have Tesla reporting their earnings, so we have a lot to discuss. So let's go ahead first with Google stock. What can I say, man? Did you see their earnings? Let me show you what happened in Google earnings. They had a 32% growth in Google Cloud. 32%. That's freaking mind blowing. They have a 13% growth in YouTube. YouTube's still growing. And the most important part of the business, which is the ad search business, right? That one, people were expecting it to go lower because of AI, but it actually went higher. It's at 11% growth. This is Google search we are talking about, you guys, right? Google search. And the crazy thing is it has accelerated earnings. So what do I mean by the accelerated growth? Is that Google search is growing faster this quarter compared to last quarter. And the crazy part is that this quarter, the last 3 months, we had a lot of people using ChatGPT. We had a lot of people using Perplexity, Grok. It doesn't matter. Like Google has shown it with the numbers that AI is not impacting their business at all. And the crazy part is that Gemini is not really fully monetized yet. That's the crazy part. Right now, they're making money off the traditional business that they're always used to making. Yet there is more to come. Now, with that being said, you guys, this is a company that's still trading at a 21 times forward earnings. 21 times. Like I listed all these great things about Google. It's growing net revenue by 13%. It's growing net income by 19%. And the company is still valued at a freaking 21 PE ratio. So I do think there's more room for Google to grow. I plan on adding more Google to my portfolio. I mean, the earnings was great. It answered so many doubts. It answered so many questions that investor had, which is about how's Google search going to do during AI? Apparently, not that much because Google search is still growing like crazy. All right. The next company we want to discuss is about Chipotle. Okay, Chipotle reported their earnings, and wow, I sold out of Chipotle before earnings, and it ended up being an amazing decision. All right, and Chipotle during earnings fell down like 10 points, and it was very warranted because it had a slowing same store sales year over year, which if for a growth company that's supposed to be Chipotle, the same store sales, they gotta be increasing, they gotta be better. Because of that, the company fell down a lot, you guys. Now it's trading around a $47 stock price, which actually made me think about buying back into Chipotle because the valuation at this moment in time is very attractive. And to me, my personal opinion is that Chipotle goes through these times where they don't do so good, but then they have times where it's just amazing. The store sales are going and popping off. They're doing amazing. And every single time I go to Chipotle, you guys, I still love it. It's still one of my favorite fast food, if not the favorite fast food of all time. And I actually think at this valuation, it's trading at a 46 PE ratio, which is still high, but historically for Chipotle, it doesn't typically trade at this high levels. I've been thinking of adding more. And here's my thesis for Chipotle stock, which is that as time passes on, Chipotle is building many stores year over year. They built 300 stores last year. I believe they're going to build another 300 stores this year. And those stores are going to compound earnings. Historically, in the past, Chipotle was able to recoup those costs of store investment usually within 3 years. Those type of numbers, I just love it about Chipotle. I've been thinking of adding more Chipotle to my portfolio, and we'll have to see. All right. I haven't bought it immediately because I've been thinking of adding more to Google and my United stock. I do own United stock, you guys, at the insurance company. And then the third company that we got to discuss about on the earnings is Tesla. All right. And what do you know? There's no surprise here. The freaking company missed earnings again. All right. Has less revenue. Revenue fell by like 20% or more. You have net income at $1 billion, which is pretty freaking mind-blowing. Okay, here's why. This is a company that is at $1 trillion valuation. But you're telling me the net income of Tesla is like $1 billion and the company is valued at $1 trillion, and the PE ratio of Tesla is at 182 PE ratio. I don't know, you guys. At a certain point, the math doesn't make sense. The company fell down only by 5%, which was surprising. I thought it should have dropped a lot more. Now, granted, the company is saying it's making some strides in the robo taxi, but newsflash, I don't know if they've ever seen a Waymo. I just think Waymo is a lot more advanced and a lot far ahead than where Tesla is right now. So we're hoping that Tesla has better earnings from here, but it's not looking so good, man. The sales have been down, the deliverables have been down. It is going through a tough time period right now, and I would love to see how Elon Musk turns around the company. But with that being said, you guys, thank you so much for watching this episode. I'll see you guys next time. Bye bye.